Joining us right now is Wamsi Mohan, Bank of America Global Research Senior IT Hardware Analyst. Good morning to you. What is the prospect, you think, of Apple actually moving iPhone production to the U.S., if you were to handicap that?
Yeah, good morning, Andrew. Thanks for having me. I think the probability is extremely low that we actually move iPhone production into the U.S. We did a theoretical exercise of looking at how much it would cost if you could actually just ship all the components over to the U.S. and then try to build the phone. It involves a lot of logistical challenges, even if you were able to get all the components tariff-free, and that would raise the price on the cost to make it by about 25%. If you actually tariff these at the rates that we're talking about, it becomes very prohibitive. It would be twice the cost to do it. So it's not the most efficient way, clearly, to go about managing a supply chain. And we think that the beneficiary here really is going to be India, because they have a really good iPhone lineup up and working. They've got about 15% of iPhones currently of global production currently being made in India. And we think it's only going to speed up the rate of transition of ramping up capacity in India. So we think the probability of actually doing it here in the U.S. is very, very low.
When you start to think about India, though, what do you think the cost differential starts to look like?
Yeah, the cost differential actually is not super significant, because the Indian government has been very willing to subsidize and provide a lot of different initiatives and work very closely with Apple to ramp production. So this has been a mutually very beneficial relationship from an India perspective. And the ramp has actually taken a very long time, right? But now you've gotten to the point where you're making 30 million iPhones in India, but there's still 230 million iPhones to be sold globally. So there's plenty of room over here, and the Indian government is working very closely with Apple to try to get that ramp done. So we think it's mutually very beneficial. We don't think the cost structure aligns very differently, given some of the incentives around some of the import duties and some of the tax benefits and other things that the government has been willing to share with Apple.
Wamsi, when you heard Tim Cook announce earlier this year that Apple was going to make something, I think, along the lines of a $500 billion investment in terms of manufacturing in the United States, what does that mean to you? Did you look at that and think that's new? It's not new. It's a press release.
Yeah, Andrew, it's a great question. I think Apple has made prior announcements of maybe slightly lower magnitudes. 500 billion was definitely the higher end of what they've announced during prior administrations. Now, when you think about what all is included in there, we think the direct investment is not super high. We think there is, the money that they pay, let's say, to Qualcomm or Avago or other companies within their cost of goods that's included in there. They could be including taxes in there. They could be including developer things in there. So it's not that there's $500 billion of CapEx that's going into U.S. It's nowhere close to that, right? So in the past, when we've seen some of these investment headlines, the actual increase in spend, whether you look at it from a CapEx perspective or you look at it from a R&D plus CapEx perspective, has just not been that high. So we don't think that. So I'd say it's more around the fact that they have a commitment. They want to highlight that they're deeply invested in the U.S. economy. They are creating jobs, and they're including a whole bunch of stuff. But I wouldn't take it as a direct line of saying, hey, here we're doing $500 billion to make iPhones in the U.S.
Would you buy, real quick, would you buy Apple at this point?
Yeah, absolutely. Look, I mean, we look at Apple from a perspective of where is the earnings power of this company going to go, right? And when we think about that earnings power, currently Street is somewhere north of $8. I think if you tariff this at even the highest tariff rates that I've come across, you could diminish that earnings power down to $7. But there is so much optimization that Apple can do that we think the net result of this, although there's a ton of uncertainty about all of this right now, we do think that the net negative impact to EPS will be much more limited. So effectively, you're getting Apple at below 25 times, and that's historically proven to be a very good level to own this when you look at the returns in the following 12 months. So we do think that it's a very compelling investment, and remains actually one of the best suited companies to navigate this tariff headwind, because they have a margin structure that supports that. You can absorb $20 billion of incremental cost. Most companies can't do that. So we think Apple's very well positioned ultimately.